Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock, let's go over the market, let's talk about what is happening and what we can expect moving forward. Tesla stock today down 15.5%, absolutely cratering to Earth's core. I mean, the market, to be fair, is selling off pretty aggressively today, right? For instance, you have QQQ down almost 4%. I mean, that's pretty serious stuff for QQQ, right? And then unfortunately, Tesla is kind of following the mean-ish stocks. I mean, you have HOOD down like 20%, which is also somewhat crypto related. Tesla tends to be, annoyingly enough, it tends to move similar-ish to crypto sentiment because crypto is just getting absolutely hammered. I mean, Bitcoin is obviously, it got hammered over the weekend, but crypto stocks, like MicroStrategy is down 17%, Coin is down another 17.5%. You have the miners down like 15, 16%. So the thing that's annoying is the fact that Tesla does have similar sentiment to crypto. It kind of is. It is what it is, right? At the end of the day. But yeah, regardless, we'll go over Tesla stock. We'll go over what I think, and yeah, let's just jump into it. If you enjoyed, don't forget to hit that like button. This is not financial advice, and I am not a financial advisor. And of course, if you enjoy my technical analysis, I mean, granted, this is a pretty difficult period. I'm not gonna lie. I do have a YouTube membership. It's just $3 a month for mainly Tesla, sometimes other stocks, or $5. It also includes NVIDIA. But jumping right into it, I just want to get right into this one. This is a spicy one, right? Tesla down 15.5%, closing at 222 and change, we'll say. So what the hell is going on and what is next, right? That is probably the main question everyone is asking themselves right now. What in the hell is going on with the stock? So let's just do the worst case scenario. What is literally the worst case scenario stock? I think the absolute, like, if things really hit the fan, if things really just, man, let's just get this over with. You know what? Let's just rip the band-aid off and let's just finish this off, right? Which, technically speaking, is a possibility. I'd be very surprised if it happens in one go, without some relief. But worst case scenario will be a drop all the way back down to about, and depending on when it happens, of course, about 170, which is this green line, which has been the true, like, super duper, like, very, very, what the hell is this line down here? I know what that is. What the hell is this? I don't know what that is. Anyways, which is the super long-term support, right? This is the one we found like substantially meaningful bounces from, right? All the way down here. And if you were to revisit it down here once again, that would put Tesla again pretty much down to $170, which honestly at this point doesn't even seem that bad. It doesn't even seem that far away anymore, does it? After a substantial haircut today of 15%. From here, that would be another, just over 20%. But honestly, hey, maybe we just get it over with, honestly. But that's like the worst case scenario, right? That's if like things really hit the fan. This is the worst case scenario. Obviously, even worse is if we lose this trend line. But you can see it's, again, like I said, found substantial bottoms on this trend line in the past. It's starting all the way back here from 2020. So what else is there, right? Let's go to the weekly very quickly here. The weekly is where I'm kind of looking at things a little bit more often, I guess you can say. So the weekly is this, right? Because again, we're having such aggressive movements. Again, I want to make this very, very clear. And there's another good post that actually I purposely like just to share with on this video. I mean, one of which is, of course, I want to share a few things. There's this one, there's this one, and the one I want to share about Tesla is going to be this one. So these ones just, again, this is just simple stuff where, I mean, pretty much all it's saying is the fact that people are very scared. There's a lot of fear in the market, People are very, very terrified right now. And yeah, we're at extreme levels of fear in the market. The bearish sentiment is very high right now on the market. The one I really want to show was this by someone called Ben on Twitter or X, whatever. So one thing that's interesting is the fact that you can see, if I open this up, he has, I'm assuming, his own little indicator, right? You can see the one at the bottom. Let me make sure I'm not blocking anything. I'm not, right? I think he made his own custom indicator, which is kind of the one in the middle. You can see here with like, green, yellow, red, whatever lines. So the thing that's interesting about this is the fact that he even himself stated that he believes that Tesla here, has never been this oversold before in its 14-year history since IPO, per his indicators, of course, below. And he's right. It's never been this oversold, mainly because, yeah, we've had bigger drawdowns overall in terms of, like, from the highest point to the lowest point, but we've never had it to this level this quickly. Most importantly is the speed. It's never been this fast, this aggressive, and in this case also this many weeks in a row of lower closures prior to the previous week. We're at week 7 now. We've never been this crazy. It's never been this crazy before, right? This is, of course, historic levels. So the one thing that's interesting here is also his indicator suggesting, you can see it has reached peak oversold territories ever since the stock has started trading. It has never been this aggressively sold this quickly literally ever. So that's just something else. So even he's shocked that it's like this, this intense, which it is. But looking at it just strictly through, levels of demand, right? Like what are the levels of demand? Well, the first one is we actually just reached it today, right? Which I'll go over a little bit more in the shorter time frame is, what happened today. But this is obviously the first one, the major one. But the one I'm honestly very disappointed that it did not hold is, of course, this level here. The fact that we didn't hold this is concerning. I won't sugarcoat it. It is a little on the concerning side. Now, granted, we are in a very strange market right now. Okay, I want to say strange, but we are in a very aggressive, I guess is the better word to say, market right now, right? Where things can whipsaw up and down like crazy. I mean, you have Qs down 4% on the day. So, technical analysis obviously is, still useful, of course, and I'll explain more why soon in terms of what happened intraday. But it's not impossible for us to whipsaw back up, especially even within the week. I mean, granted, this is a weekly chart, right? The week just started. So if somehow by some miracle Tesla erases all of today's losses and still closes back above, we'll say about the low 250s by the end of the week, which with this kind of price action, I mean, who the hell knows at the end of the day, right? It's, it's extremely aggressive price action, extremely volatile, which also the VIX we'll talk about. That's the Dixie. The VIX, we'll talk about the VIX soon. You really just can't be surprised one way or the other, whether we, crater down this aggressively or we, rocket back up very aggressively, potentially post CPI maybe on Wednesday or even PPI on Thursday. But the thing that's interesting is the fact that we are, of course, at this next level of pocket demand after failing, of course, this pocket of demand right here, which is disappointing, but we're at the next level. The one below this one, essentially, in my opinion, if we lose about 220 or like the high two teens, will be the next demand pocket, will be closer to 200 to as low as about 185. That'll be the next level, which is insane that we're even talking about that, but here we are. And if we somehow lose that, that's where we start dropping to pretty much the weekly demand pocket, which is sitting at about the 150s-ish region, which also lines up really well with this trend line down here, which is at about 160-ish, give or take, right? So those are the main levels to the downside. If we just continue dominoing down, 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 those are the levels to watch. Now, granted, again, the stock is like stupidly, like comically oversold. It has literally never been this oversold in its history ever. Like this is the most aggressive straight line to the downside, like drilling into Earth's core selling that we have ever seen with the stock. And sometimes it kind of just, it is what it is, right? So we are living in historic moments here, which for better or for worse, at least that's something, we can say that. But yeah, so moving forward though, the level I'd really want to recapture, if we can't do it by this week, let's say we don't do it by this week, which is again, pretty much above, the low to closer to mid 250s, which is essentially recapturing this trend line, will be as a resistance, right? This trend line will act as a resistance if we cannot recapture it this week, because we haven't closed a weekly candle below it just yet, and this could be one of those weeks where we do it. But obviously it's still Monday, there's still a lot of time, so we have to see how this week closes. But if we do not close below, or above rather, the low to closer to mid 250s, well, this trend line will now act as a resistance until essentially proven otherwise. So let's slowly watch for that, and let's just see how that slowly unfolds throughout this week. I mean, there's a lot of data coming out, there's a lot of like factors coming out this week in the market, so stay on your toes obviously. But that's that. I do want to quickly jump into the technicals a little bit. So on the 1 hour, what we had, and this is pretty rare, but what we had was a falling wedge, right, where we were essentially falling to the south side. And you can see when we came down to the bottom side over here, and I haven't moved this wedge at all. This wedge was in my previous videos as well. It's pretty much the exact same thing. I haven't touched it at all. We stopped. You can see here, we stopped a little bit, right? We stopped, we started to breathe, we started to potentially show signs of a balance, right? Or potentially even a bottom. But then what happened? We broke down under the wedge. That's where I actually ended up taking or some of my stops hit on Tesla. I had a cash I could put. The stop of course hit. And then I obviously resold it pretty much as we're down here, which I'll explain why. But nonetheless, the point is the fact that the wedge broke downwards. A falling wedge breaking southwards like this, it's not common. Like you don't see falling wedges break to the southwards. They are more often than not, they play out something like this, right? It's not common to see a breakdown of a falling wedge. It's pretty rare. I don't see them very often, but here we are, right? The selling pressure was just that relentless. But what does that lead us into, which I'll keep it for now. The 15-minute chart shows us in a very large descending wedge, which also is similar to the 1 hour wedge, except falling wedge, except this is a descending channel. Now we're at the bottom end of it once again. So this is the next level to watch essentially, which lines up with that weekly demand pocket zone I just mentioned, about 220, give or take, of course, which is pretty much the bottom of this channel. So those line up pretty nicely, which is good. I like when things line up like that, which gives you more confidence that it's probably a valid level. Now, obviously, again, with these levels and the way technical analysis works, you have a level, you have a support or a resistance. You assume it acts as such until proven otherwise, right? And that's essentially what I try to explain with this, falling wedge. I assume that this level will act as a support. This kind of 237 to 235-ish range, and it was trying to show that it would, until of course it didn't, and look what happened. We flushed even further once that level got breached. And that's just kind of the way technical analysis works, right? In this case, we're at the next tier now, whether it's the weekly time frame, the daily that I showed, which is also kind of roughly in line with this gap fill down here, and of course the 15-minute time frame as well, which is roughly where we're sitting at on this massive, like very large descending channel, all the way back up from 302s, right? Very aggressive descending channel. But again, technically speaking, similar to the wedges, it doesn't have to break up to the upside, but more often than not, descending channels do break up to the upside. So as long as we pretty much hold about 220 or like the high 2 teens, really just depends on when, because we can technically just keep hugging the bottom of this channel like this before potentially getting, a move back to the upside. Similar to the way I was talking about NVIDIA, right? Back over here on the daily chart, right? When we're, NVIDIA was in that, large descending channel, which it still is, right? Kind of like when we were up here, just obviously flipped because Tesla's on the bottom end of the spectrum, or even when NVIDIA was down here, and then it went back up here, got rejected at the upper end of it. Now it's pretty much at the bottom end of the, channel. Same idea with Tesla stock here in this case, right? You naturally expect the channel to play out as a channel, right? And obviously as you're within the downward channel, you most likely continue downwards. But now that we're at the bottom end of the channel, again, worst case scenario, we just continue kind of hugging the bottom line. You would expect that as long as the support essentially holds, that you move up to the top of the channel, and at some point you break out of the channel and you make your way higher. Now, obviously there's work to be done before that happens, but that's just kind of the expected pathway for Tesla stock in this case, as long as those key levels, of course, continue holding, which so far you can see as we got to the bottom, they're trying to hold. It's not very convincing, I won't lie, but they are trying to hold. The next thing I want to briefly touch on, hopefully I'm not forgetting things, there's so many things to talk about, is the volume. The volume today is very, very, very elevated. Obviously, we fell out of this downward channel, which isn't great, right? This naturally can be acting as a resistance closer to 250, so we'll have to act according to that as we get there. But the two things I want to mention is this, right? The volume today and the candle closures. The volume today is really, really high, right? This is one of the highest volumes we've seen in quite some time in pretty much this year, and arguably, for the past 3-ish months, right? Only being surpassed by the volume is back over here. Now, the one thing that's interesting is the fact that when you get a volume spike after a rally or after a large sell-off, that not always, of course, nothing is perfect, but more often than not, that's usually a good sign of capitulation or potentially some level of distribution, in the sense of, like, for instance here, right? When Tesla, for instance, had this massive rally, you had this massive volume spike right here, even right here. And then it, of course, sold off. They had a massive volume spike right over here, which lined up with the top right here before Tesla started consolidating and doing a whole lot of nothing. Now, granted, this, of course, did form that bullish rising triangle pattern, but nonetheless, it still marked a pause at the very least, right? Then, we started rallying, and look at this. We were essentially rallying. Yeah, the volume started increasing, but, the volume didn't spike aggressively. It just, slowly increased as we did rally back up. But look what happened at the top. As we got to the top, the volume spiked once again, specifically on the candle. That was the first candle that showed a bearish or potential bearish pattern, which of course in this case was the first candle that closed below any of the previous candles lower, or the first candle that closed below the previous day's candle's lowest point, right? Which is important in these kind of situations, where you can see this candle right here on that volume spike closed below this candle's lowest point. That was the first time it happened on this rally. Like, if you look at this rally right here, after we broke out once again, every single candle did not close below the previous day's candle's low, except for this one. Volume spiked, marked the top, and we sold off. Same kind of idea here. Now, granted, we need to see a bit more. We're not done just yet, right? We need to see more confidence and more confluence, I guess you can say, overall. But the point I'm just trying to make is the fact that this could be some capitulatory volume, spiking. In this case, at the potential bottom of a downtrend, right? This is a very aggressive downtrend, and obviously, like I said, in such scenarios, we want to see more factors that contribute and back up our theory behind this. But having a massive spike in volume like this shows, to me at least, capitulatory volume, right? So let's see how this plays out. Let's see if we can form a bottom. But the next thing I wanted to mention, similar to what I mentioned up here with how we rallied and each candle closed higher than the previous week or previous day's low, Same thing is happening here, just the flip, right? Look at all these candles. Look at this massive, very aggressive downtrend. But look what happened. Not one of these candles was able to close above the previous day's candle's high, right? So even back here, you can see, we started kind of consolidating, et cetera, et cetera, et cetera. And then we started selling off. And then finally, this candle closed above the previous day's candle's high, right? And what was that candle? It was this candle right here. And then what did we do? We went sideways for about a week, kind of cooled off. And then we, of course, broke this, these pretty important levels, and we continued selling off. But look at the sell-off, right? This whole time the sell-off has been happening. Each time, if you were to mark the high of the previous day's candle, this was the high of this candle here, we closed down all the way down here. This was the high up here, we closed here. This was the high here, we closed here, right? And just rinse and repeat. This one was pretty close, but we didn't. This was the high right here, and we closed right here below the high. Same idea with this one. We actually broke the high, but we didn't close above the high. We ended up pretty much getting smacked back down by that 9 EMA, right? We couldn't close below the high. Same with this one. We couldn't close above the high, rather. We cannot close above any of the previous candles high. That's another factor I'm personally looking for on Tesla stock for me to determine whether or not it's finally ready to reverse. Now, there's a lot of work to be done to close above today's high, tomorrow. Let's see if the bulls can do that one. That's gonna be a tough one for sure. But that's kind of what you want to see. You want to see a closure above the previous day's high. That would be another good factor to potentially start thinking that at the very least the bleeding substantially slows down, if not stops entirely, and we make our way back up. So watch for those potential factors, right? Like those need to happen. Ultimately, they have to happen, or else, we'll continue bleeding down like this. Now, the last thing I want to talk about, this video is getting long again, is the VIX. Now, this is what I told my members on Friday as the market closed, and I'm pretty sure I mentioned it in this video as well. The VIX closed, really high. Like it closed at 23.5. And I mentioned that, if the VIX is closing up this high, like we could be close to a bottom, but to assume that we're at the bottom and there won't be more volatility at the very least early this week, which we've clearly experienced, is a mistake, right? That's exactly what I was telling my members, and that's exactly what happened. Now, granted, this was more than I expected, but nonetheless, the volatility is still very much there because the VIX is still strong. Like if the market and Tesla, whatever, NVIDIA, anything, if any of those bad boys truly want to bottom, the market really wants to reverse and really make its way back up and really calm the hell down, essentially. The VIX has to calm the hell down. If the VIX is continuing to ease up like this, hugging the 9 EMA or the 8 EMA, you can see here, just consistently hugging the 8 EMA, not letting go past it, not closing past it, et cetera, et cetera, et cetera, like underneath it, the market will continue having problems. The VIX has to either close below the 8 EMA on the daily or has to pretty much fall out of this channel. Neither of those is happening. That has to happen. But once it does happen, the market can finally get a relief rally. But the VIX is kind of suppressing the market down right now because there's a lot of fear. So that has to happen for the market to make its way back up. So watch for that moving forward. The put call ratio is also entering, pretty damn extended territory here on the daily chart. If I go to the daily here, right, we're, in pretty extreme levels. So yeah, there's a lot of factors that play, but that's just kind of what it is, right? I can't believe we're at 222. It's pretty insane, but sometimes, it is what it is, right? That's just kind of part of the game. I guess the very final thing I'll mention in this video is just getting so long because there's just too many things to talk about, is the weekly being down here. So the 8 EMA on the weekly is sitting at about 310 is where the 8 EMA is sitting. This is the 8 EMA on the weekly, the green line. It's aggressive. This is an aggressive one. This is not an EMA that usually lags behind price action too far, whether it's the daily or the weekly or whatever. You can, if I go all the way back here, you can see, even when we're selling off aggressively, even right here, you can see this was pretty far away, right? But then we snap back to it, right? So the point is the fact that we're really far away. Like we're at extreme levels of distance away from the 8 EMA. And that's, again, it's a very aggressive EMA. So even us being this far away from the 8 EMA just signals just how relentless the selling pressure has been, but it also acts as a potential reversion to the mean, which should at some point, again, I'm not trying to say when, I don't know when it's going to happen, but keep in mind when Tesla was rocketing like this, I was saying, first of all, be careful up here, number one, but number two, Tesla can fall just as fast as it rockets back up, or rockets up. But the same is true once again, but this time I have to say the opposite, right? Where Tesla can also move its way back up just as fast, maybe not this fast, but pretty damn quickly, how relative to how it falls as well. So just keep those things in mind. But nonetheless, yeah, this is just a market where you have to be careful, right? This is not a market where you get too greedy. This is a market where you just stick to a plan, maybe slowly DCA or slowly have tight stop losses or whatever the case may be, and you just slowly nibble and you just slowly kind of ultimately wait it out at the end of the day, right? You slowly wait it out and just not financial advice, but you nibble on key levels. But nonetheless, that's all I got for you. Thanks for watching. See you tomorrow. Peace.